Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Scott Ham, CEO at Pinpoint Predictive. Scott, thank you for joining me today. How's it going?
It is going great, and thank you for having me. I'm thrilled to be on.
My pleasure. So Scott, you are, your LinkedIn says United States, but just before we started recording, when I asked, you said you're, an hour and a half east of Atlanta, Georgia?
Correct.
Fantastic. So my LinkedIn says Atlanta, but we actually are summering, I guess, because it's not wintering. I mean, it's we're right now in Argentina for a period of time, and having a lot of fun. But it's winter here, so and like we're kind of in the middle of winter. The thick of winter is July, so. If I remember Atlanta at all, because I've spent 5 summers of my life in Atlanta, we're recording on June 22nd. It's probably 85 degrees and 100% humid. So how is the summer treating you?
You know, it's been interesting because we actually moved down here last year at this time from Iowa. And last year at this time, it was mid-90s, humid. So far this summer, we have lucked out. I should find some wood to knock on. It's been, mid 80s and, quite a bit of rain. So it's keeping it cool, I think, so I can survive.
Okay, so I'm Iowan at heart. I was born and raised in Costa Rica, but I went to school at Iowa State, and I stayed in the Des Moines area between Des Moines and Ames for 10 years. It's where I started my insurance career. So it looks on your LinkedIn like you were mostly Cedar Rapids. But awesome. My phone number to this day is 515.
That's great.
Iowa pride. So anyway, we always give the guest a chance to give the elevator pitch. What is Pinpoint Predictive?
Yeah, and thank you, Tony, for giving me the opportunity. So Pinpoint Predictive provides the P&C industry with the earliest and most accurate loss predictions and risk scores with just a name and address at the top of the funnel that enables carriers to fast track profitable growth. Our platform leverages deep learning, proprietary business or behavioral economics data, and trillions of individual behavioral predictors that help insurers identify the cost of risks associated with prospects and existing customers and to grow intelligently.
Okay, perfect. So there was a lot there.
There's a lot to unpack there, but
Okay, perfect. So I'm a former underwriter, and I'm a CPCU, so you're speaking my language. And I did underwriting twice. I did a year with Nationwide Ag Small Commercial, so doing farms basically, and hobby farms. And I did 2 years with Liberty Middle Market, doing middle-sized businesses. Okay, so easiest and most accurate risk scores at the top of the funnel. Okay, so I the easiest and most accurate. I'll take your word on that, right? But why top of the funnel? I do find that interesting. Out of all the insurtechs that I've had, nobody has before said what we do is at the top of the funnel. So why? What do you mean by top of the funnel?
Yeah, no, it's great, and it's earliest, not easiest. Although we are very easy to do business with, it's the earliest and most accurate. And you don't have to take my word on that. We actually run a proof of value, which allows the client to validate what we're talking about. So you shouldn't just take my word for it. You should test it out. So if you back up a little, and I appreciate your experience. Some of the issues that we're having right now is it's very hard to keep up with the cost of insurance. There are levers that you can use, and insurers are using rates, obviously, but regulators are getting a little stingy on rates. And then you can exit some geographies, which you see happening as well. We think if you did, at the top of the funnel, if you did behavioral-based risk selection, before they even come in your door. And again, all we need is a name and address. But if you do that highly powerful and predictive risk selection at the beginning, you're bringing in better business, providing the better experience, a relevant experience for the customer, and that's the better way to go than trying to continue to play in the filed underwriting areas, the rating and pricing areas in that area.
Perfect. And are we talking only property, or do you also take a look at liability?
So we actually right now are focused in home, auto, and small commercial. If you take a little step back, Tony, the reason we are able to provide such a lift for our clients is because most insurers are really focusing on the thing that they're insuring. You know, if you look at, you said small commercial, they're getting a lot of information on the business, the industry codes, the employee count, revenues, but not a lot of information on the small business owner. And that's leaving a lot of the risk profile on the table. Same goes for the home and the car when you're looking at it. So that's why you see such lift in using behavioral predictors from Pinpoint.
Okay, perfect. Very interesting. So for home, it makes so much sense, right? Name and address, and if technology works the way that I believe technology to work in 2023, with that, we should be able to get all the information on this property in the history of humanity, right? And then be able to apply all of our algorithms, AI, ML, et cetera, and give a predictive risk score. But for auto, that's interesting. For auto, in my mind, I need at least your driver's license. So how does it play with auto?
Yeah, and if you're thinking about it, the name and address for auto applies as well, and we're not looking for information on the car. Just like we're not looking for information on the house, maybe we back up and say, okay, what data do we use to build our predictive models that we then sell the predictions and provide the predictions to the clients? You know, we are looking at data points and have collected trillions of behavioral predictors that are not typically collected in insurance. We do not look at claims histories. We do not look at driving records. We do not look at zip codes, anything you can think of, natural language. We don't look at, because frankly that brings bias that we don't want to have in our predictions. So we are 100% looking at the behavioral profiles of the individual, and because the individual is driving so much of the risk in whatever line we're talking about here, the individual, and it's that type of intelligence that has not been fully leveraged in insurance, and that's why that's how it works.
That makes perfect sense. And looking at your website, I found it really interesting, or really encouraging. Let me put it that way. I found it really encouraging that you are already partnering with some fairly traditional carriers. So because often I bring in insurtechs, and I bring insurtechs of all sizes, sometimes a little more than like the co-founders, because I'm happy to have them on whenever. And so often they have like an MVP, and maybe they're looking for the first client, and that's the reason they're coming on. Or they have something cool, but they're only partnering with some insurtech carriers, not with traditional carriers. And my listenership is probably heavy on traditional carriers. So I love that just listed on the website, you have Ohio Mutual, a very traditional wonderful Ohio carrier, but very traditional carrier, CSE, AmTrust. So those are three traditional carriers. And then you've got a few others. But if you're successfully working with the likes of Ohio Mutual, then like there are so many middle-sized carriers, even smaller carriers, that this would make sense for. So that I always wonder about the integration piece. So you know, the listener listens to this and they're like, oh, this sounds fantastic. I really wish we could have this, right? They give you a call, they have a chat with your team. By the way, I love at the bottom of the website, we are ready for a challenge, and the email. So many times the challenge is not what you're offering. it's the integration with the carrier that is being ran on something slightly better than Stone tablets. So what does the integration look like?
Yeah, and I'm glad you asked that, because there's several things that go into having a successful product. I think it's the team behind it first and foremost. And one thing that sets us apart is we have high level technical expertise and we have high level insurance expertise. All of us coming from carriers and leading carriers. So we've sat in the seats of the C-suite and the executives, P&L owners that we're talking to and targeting as part of our process. So that helps. First of all, there's some built-in credibility, if you will, but also we don't take that for granted. We use what we know is happening and tailor our offering for that. And when you look at how we are deployed, our predictions are immediately deployable. We are not a data provider. We provide predictions that can be used on their own, and they can be used as part of or to improve a model that's already in existence as another predictor. There's no coding necessary. There's no data science work necessary from the provider standpoint. We work on real-time API, or we can also work on batch. So once we're done with the proof of value, the model that we will use for that client, because we build custom models for the clients, that model is ready to go whenever our client is ready to go.
Okay, so if the model gets customized for each client, how long does it take from phone call to proof of value to fully deployed?
Yeah, probably the better way to look at it is how long does our proof of value last? Because as you know, sometimes it takes the sales cycles a little longer in insurance.
2 years. 2 years if you're good.
Right.
If you have the connections.
So we like to look at our proof of value, and we like to say we have the fastest time to value because our platform is automated. When we sign a proof of value and have a proof of value start date, this from start to end is 30 days. We on the Pinpoint side are actually done with ours in a week, maybe two, and then it's the carrier validating the results, and then we're talking about how it can be used, where it could be deployed.
Okay.
I hope that makes sense.
Yeah, no, that makes perfect sense. That makes perfect sense. What kind of what kind of results are the clients seeing? And you can share client names. You can not share them if you prefer not to. You're not supposed to. But what kind of results are the clients seeing? Yeah,
so I won't reveal any client names, just because I can talk some results. But we're seeing from a loss ratio impact perspective anywhere from 3 to 10 points. Now that is Pinpoint being deployed in the areas where we know it has to be deployed and used. So that kind of impact, you're looking at 8-9 figures bottom line impact to clients. Now, Tony, those will vary based on the size of the client. That's why I think it's better to look at loss ratio as opposed to the bottom line dollars, because if you're saving 7 million at a smaller, right.
Yeah, 3 to 10 points. So I was never I was never in the leadership of a carrier. I've never been a manager. I'm a former underwriter and general insurance nerd, but I've never met a underwriting leader that wouldn't love a 3 to 10 point improvement, or for that matter, a COO or CFO that wouldn't love a 3 to 10
I was going to say a CFO, because you know this, the industry itself, lines are at different places, but profitability is a focus. And I want to make sure we don't always talk about profitability to the carrier, because I think that's good, but it also helps the producers because the business is stickier. they earn bonuses from their claims performance. They earn renewals. So I mean, our predictions are helping that value stream, and it goes to the consumer too, as we mentioned, because if you're segmenting based on this, you can provide that relevant experience to the individuals, knowing who they are. But you're right. I mean, the CFOs, you might be surprised, but our target for sales is actually in the chief actuary and the C-suite, or a P&L leader, because the loss models that we're impacting are inside the actuarial area when you're looking at loss cost and those types of things. So that's why it's our focus, at least, is in those areas.
Okay, that is super interesting. I would have had no idea. Okay, awesome.
You learn, right? And because there's no coding, because there's no data science work, and because we're impacting models at the carrier that are where the actuarial department is accountable, that's where you should go, because they'll understand not that I shouldn't say it that way, but they'll understand the impact on their models.
Absolutely. What is the pricing like?
Yeah, so our pricing is based on the proof of value. So we use a value-based pricing. And what we do is we just take what's uncovered during the proof of value, and we factor in a fee schedule based on that and enter into a three-year contract with our clients.
Okay. So very customized pricing.
Yeah, and Tony, it's done after, the carrier itself has validated the results, and then that value is built from information they actually have, which, policies in force, average premium, growth expectations. So they're actually doing all that factoring to see what the bottom line impact is. And I think that's a good way to go about our business, is to be a partner in this and not just come to them with a number that they can't validate. We'll look at their number.
Okay, fantastic. This sounds amazing. So I am always curious on the origin story, and especially being the CEO, the origin story is probably very intermixed with your own story. So I am really curious, how does an attorney end up creating an analytics company?
So I won't take credit for creating it. I'll give that to Avi Tushman.
Perfect. Okay.
But it's it is a great story. Avi is just super smart, and over the years he and the team have built this platform. If you can imagine the time and capital needed to gather trillions of behavioral predictors and build out your own proprietary behavioral economics data, talking to tens of thousands of people to build that, it's quite an endeavor. And then to bring in deep learning to predict core insurance outcomes like frequency and severity and loss cost, these are huge endeavors. And so you needed somebody like Avi to do this. And so it took several years for him and the team to build it. I came into it due to an association as a mentor with InsurTech New York. I was with McKinsey, and then went as a mentor at InsurTech New York, met Avi at a virtual event. And, when he showed me what he had created, I'm a conservative insurance guy, but I thought, this is perhaps the most impactful solution to come to insurance in decades. And when I say that, I mean, you remember and know the impact of credit. We don't look at ourselves as credit, so don't do that. But the impact that credit had, I see Pinpoint having the same impact. And being an insurance guy to the core, been in insurance for a long time, I see the benefits that can come to the industry in utilizing our predictions. It causes the industry to be more profitable, but equitable, more inclusive, And these are all areas to me that are super important from a legacy standpoint.
Fantastic. Agreed completely. So how old is Pinpoint?
So Avi started working on Pinpoint late 2015, early 16, and then was
Okay.
looking for, it was not involved in insurance at that time, looked at various different market fits, as many will do. Luckily, thought of insurance, and in InsurTech New York, the first cohort, really started steering the ship, and insurance certainly is where the market fit is.
Fantastic. How many employees nowadays?
We have 16 employees.
Okay, so
we are-
7-year-old InsurTech, very much a startup, just kind of a mature startup. So I am really curious. So this is your according to LinkedIn, your second CEO role, right? So you were CEO of a very traditional carrier. You can
Right.
name the name if you want to, but of a very traditional carrier for 5 years. And then you went to McKinsey for 3 years. So given that this is your second CEO round, last company, I'm guessing, just looking at the name, I'm guessing they have 20,000, 30,000 employees. But it's definitely not a startup, right?
Right.
What has the experience of being CEO of a startup been like compared to having been CEO of a major traditional carrier?
So, as you might imagine, many differences, but some similarities. If you've built leadership teams, there's similarities there. What you don't have is a lot of the a lot of the levels, the silos. You wear many hats, and to me, that's been very enjoyable. I have to say, I have worked with some awesome people, and always thought I was working with high achieving teams. As we've put Pinpoint together, I can't imagine having a higher achieving group than we have at Pinpoint. And to me, you have a little bit of freedom, and it could be because we're so remote now. I should add that in. Before you had to relocate folks to where you were headed, and sometimes that stood in the way of getting that really truly great talent. Now you're able to, and we are remote, we're able to find the talent wherever it is and have them bring those talents to Pinpoint, and that's been a huge difference. But I think the energy, the fact that I think the multiple hats by every individual is the biggest difference from the larger carrier where you have your functions. Not that you aren't giving opinions and involved in some of those decisions, but you have your functions. And here we look at it as everybody is charged with Pinpoint's success and our clients' success. You could be in client services and doing sales and helping in product. And that's the way you really bring a well-rounded product, is to have those different expertise come into play. So I have found it very much invigorating to work for a startup. It's been exciting. I wouldn't be doing it if it wasn't. I wouldn't be doing it if I wasn't working with people I really like working with. And then, even though this sounds a little sappy, and you'll probably smile, I to my core believe that Pinpoint provides an answer to the industry to safeguard the industry and also to be better to consumers. And I truly believe that that's what we're working with here.
Fantastic. Absolutely fantastic. I love it. So when the podcast goes live, I will tag you on LinkedIn. I will tag the company on LinkedIn. What is so for the listeners, probably carrier leaders who are interested, who want to have the conversation. What is the best way to connect with your team and get a demo or whatever the process is?
Right. I would recommend they contact Lucy Stribley, but if you go on our website, there's actually a schedule button, I'll call it a button, even though that might not be what it's referred to, that will go directly to her. But Lucy can be found on LinkedIn, and I can actually provide you her email that we could put in here.
Okay, fantastic. And I do know her from her prior life at the last company she was at Flywheel. Fantastic. Thank you so much for your time today. This has been super interesting. I do agree that what you guys are doing is important, and I love the fact that you're doing this thinking of your legacy. Because I do agree, it can have a big effect in insurance, and insurance has a big effect in society in general. So thank you for the work that you guys are doing, and I look forward to have you guys back in a year or two as you continue to expand this. It's been wonderful. Thank you so much for your time.
Thank you, Tony. It's great to be able to not only meet you, but to tell the Pinpoint story and what we're doing. If you can't tell, it really excites me, and it's great to have your audience hear about it and hopefully get in touch with us.
Thank you.